The best way to predict the future is to create it. Time is precious, time is money, and this is the time for Morning Talk on Atlantic Television Network. Good day, viewers, and welcome to a fresh episode of ATN Business on Atlantic Television Network, right here in the city of Port Harcourt. This is the network's medium of bringing the happenings in the economic sector of society to our discerning viewers. This program is aimed at bringing to the doorstep of viewers the business, financial, and economic activities from all strata of the society. Its delivery is accentuated through the various stock exchanges across the world, news about government economic activities, private sector business activities, laced with expert opinions, stakeholders analysis, and correspondence report. We are open for advert placements, bookings, and commercials. You can connect with us on all our ATN socials on Facebook and YouTube, Television Network, on Instagram and TikTok, Atlantic TV Network 1, on Twitter, Atlantic TV Net. Watch us live on our website at www.atlanticnetwork.tv. We take a short break, and when we return, we'll fill out the details. Stay tuned. Welcome back. Thank you for staying with us. Joining me on A10 Business to analyze our top story today is Mr. Ukworia Benson Oekane, a marketing professional and a public analyst. Thank you, sir. Welcome. Thank you for joining us today.
Thank you, Mr. Michael.
Thank you.
Thank you, Michael. It's a pleasure.
And on to our top story. Premier Motor support, petrol price reduced. The ex-depot price of its petrol from 970 naira to 899.50 naira per litre. This sparked intense pricing competition in the downstream sector, forcing the NNPCL to reduce its ex-depot price to 899 naira per litre. Similarly, the refinery announced its partnership with MRS petrol station to sell petrol from its retail outlets nationwide at 935 naira per litre to the delight of Nigerians. Speaking further in the interview, Dangote reiterated that the 650,000 barrels per day refinery will not only transform Nigeria's oil sector but also the country's entire economy. He stressed that when the country imports petroleum products, there is more pressure on foreign exchange. 40% of our demand on foreign exchange is through people dealing in petroleum products, and the more we allow imports to come in, not because I do not want import, but the more we allow imports to come in, the more we keep using most of our foreign exchange out of the country, because the majority of those letters of credit open for petroleum products and the goods are not coming into Nigeria, he said. There is nothing you will do that you don't get criticism for, but I think we cannot also control people from speaking their minds. Dangote reiterated that he was open to criticism, adding that in the history of Nigeria, in the last 100 years, nobody has put in $20 billion in any project. criticism will not stop us from continuing with what we are doing. I did this project because of my love for my country and to make sure that I have a legacy project. If I invested this money in Google or Apple, my investment will be more and I wouldn't be having the headache that I'm having today. Sir, what's your thoughts on this?
I think the first thing you should have in mind that Dangote is a businessman.
Okay.
So what you expect from a businessman is what you see. But I like the fact that he is saying he's investing in his country. It shows his love for Nigeria. And like he targets legacy project, which is a good one. And he has made it clear that there are other things he can as well invest his money and get more returns that you are seeing with the petroleum sector. But at the end of the day, Nigerians, the expectation from Nigerians was his refinery is going to reduce the price burden for the common man. And you know, I think the misconception that started this whole thing was at the early part when the government were so involved and they were giving this impression, they were making politics out of it, that when this comes, it will adequately solve our problem that has to do with petroleum price. But he made a very valid point from his own statements when he said demand for dollar is always higher when everybody is sourcing crude and you are refining abroad. So the fact that he is got to refine in Nigeria, that will reduce the burden on dollar, which we hope will reflect, because as it stands, most of the good things they have mentioned, either in the private sector or in the public, it is not reflected in the common man's life, day-to-day life. But I think Dangote's position to reduce price and everything he has done, the investment of $20 billion into that sector, is something that is highly commended. And for a businessman and of African descent to establish that refinery in some country is a very good development for us. But there are certain areas that we must also look at.
Okay.
So if the dependence is mainly on the fuel and the petroleum sector,
okay,
help salvage current situation that we're faced with, we must also look at other things that can be alternative, like the railway sector.
Okay.
If more investment will go into that area, it will also complement its own efforts. And I want to say, for those of them who have the finances, it's another area that we should start looking at to invest in the railway, because part of our major stake as far as commerce business is concerned is logistics.
Okay.
And the movement of goods services from one point to the other.
Okay.
But by and large, Dangote has done something in that field. It's highly commendable, and we look forward to other things that he can do to help us. Already he has tagged this in legacy project, and we expect more from him as a leader. He is the leader in the business community. So for that is all I can say.
Okay, so do you think other marketers of petrol would love to follow this step, considering the risk involved?
It's a difficult nut to crack, in the sense that you have to understand your environment and your capacity.
Okay. Before
you take certain decisions. It will be difficult for anybody to speak for other marketers involved in this trade.
Okay.
But again, the country first, I think if you look at the sector, it's a very sensitive one to the common man's life. And for that reason, it is important that we should not just make profits the basis for everything we want to do.
Okay.
We should also look at how we can help salvage the current hardship in the country.
Okay.
So we only appeal and encourage others in his shoes who have capacity to follow similar and follow suit and do something that can help the common man. Because at the end of the day, we cannot depend on governments alone to help us achieve our goals.
Okay.
From Nigeria as a country, all hands must be on deck to make sure that we contribute to the growth of our nation. And I believe in the progress of Nigeria, and the future of this country is bright. But we need to acknowledge the little effort made by people like this in the business community and those in the public community as well, so that together, collectively, we have a stronger economy for us.
Okay, so one more question. Do you think Dangote's stand would influence the price of petrol from other marketers involved, or he would
Yes, it will influence. It might not be the way we expect it to be, but it's something that definitely will influence. And what we also suggest as a citizen of this great country the government should also monitor those who are exploiting this business.
Okay.
Yeah, people who just, for reasons that we cannot explain, they will just want to take advantage of the situation. So we must also look at how to strike a balance in that regard, so that people don't just take advantage of the situation and exploit the common man.
Okay, Dangote specifically said the price is reduced in response to market. Do you think in any way that the season we were in must have influenced his stance?
The reasons for his decision, there are many. We can say yes of the season, but another thing I think is we need more people to invest in the sector. The other, we heard that in Port Harcourt the refinery is already running, and I think $1 billion was invested there. But we can do better. If what has invested as a private businessman is 20 billion, the government should at least do enough of half of what he has done. Like I said earlier, they should look at other sectors that will adequately complement this sector, and that is the railway sector.
Okay.
Because to a large extent, these things, they work side by side. We are trying to look at what will grow our economy, and what grows any economy in the world is distribution of goods and services across board. And one way you can do that, when you are looking at petroleum to the common man is fuel price, and that tends to affect everything. So if you are also trying to solve that aspect, common man, whether it's being political, being in the private business service, one should also endeavor to look at railway, which is closely related, and it's a direct comparison to how you can drive this economy in the area of distribution of services and goods. So I must say this with all sense of responsibility. It is very important that we also look at that railway sector, and private persons should endeavor to invest in that area. Dangote has done well. You can criticize him for all we care, but at the end of the day, he has done his bidding. We should look at other areas that can support, complement, and grow. Collectively, we should grow.
All right, we should grow. Thank you, sir, so much for your thoughts. We'll move on to our next topic.
Thank you, Michael.
2025 budget. Federal government budgets 1 trillion naira for special power interventions. The Ministry of Power plans to allocate a significant portion of its 1.2 trillion 2025 budget towards financing a range of multilateral and bilateral loan projects to enhance electricity generation and distribution nationwide. It allocated 810 billion naira to fulfill its funding obligations of the $1.74 billion World Bank's Power Sector Recovery and $2.62 million Distribution Sector Recovery Program loans to improve the technical and financial performance of electricity distribution companies. The DIRSEP program seeks to install 3.2 million meters. These initiatives will focus on improving infrastructure, increasing efficiency, and expanding access to reliable power for communities across the country, ensuring a more sustainable and robust energy system for the future. To resolve this recurring issue, the Power Minister Adelabu Adebayo revealed that Nigeria requires at least $10 billion over the next 10 years to achieve a 24-hour power supply across the country. However, several underlying factors have hindered the presidential goal to generate 6,000 megawatts this year. Further analysis showed that the government will spend 36.26 billion naira as counterpart funding for the Zungeru transmission line and earmarked lines and substations, and 250 million naira for JICA and GIZ donor-assisted project. 10 million naira is for the construction of a 50 megawatt grid connected scale solar project in Giwa, Jigawa State, and 160 million naira as counterpart expenses for bilateral projects under the ISA, ECREE, and KOICA. Also, it budgeted 85 million naira as grant aid counterpart funding for donor assisted projects, and 50 million naira for the hydropower development master plan and strategies for environmental and social assessment. Under the special intervention project, the government proposed a sum of 25 billion naira for the completion of uncompleted priority projects under the Transmission Company of Nigeria, 36 billion naira for the distribution intervention for transformers, cabling and poling replacement across the 6 geopolitical zones, and 150 billion naira for the funding of the Presidential Power Initiative. It also proposed a sum of 269.74 billion naira for special intervention power projects, 47.35 billion naira for the construction of transformers and substations, and 36.82 billion naira as counterpart funding for earmarked transmission lines and substation projects. These details were disclosed in the line items of the Power Ministry's 2025 appropriation bill analyzed by newsmen on Wednesday. The report revealed that 585 billion naira will be spent as additional financing for the power sector recovery operation, while the DISREP will go up 220 billion naira. Nigeria has been battling epileptic power supply, affecting the productivity of small businesses and manufacturers. This challenge is exacerbated by the frequent collapse of the national grid, with a total of 12 breakdowns recorded in 2024. So, sir, I would love to have your thoughts on these, the budgets for the power sector. What do you think about this? Sir, are you with me?
Yeah, I'm with you.
Okay, I was asking your thoughts on the budget of 1 trillion naira for special power interventions, considering the fact that there has been a total of 12 breakdowns recorded in this year only.
To be honest with you, the power sector is a mess. I must be very blunt on this. I think the amount that is giving us figures that are enormous for projects, and at the end of the day, nothing tangible is achieved. I think what we should look at more is, first of all, accountability.
Okay.
We should be very responsible. We should behave responsibly. We should not just go about spending money for projects like this. These projects, they are capital intensive. It's important we give account to every penny that is spent. Even in the past, I have not seen any probe on previous amount that have been spent on power, because every government has always come with very lump sum, big sets of huge amounts, all in the name of power projects, and nothing is achieved. The power situation of Nigeria still remains stagnant and even getting worse by the day. I'm not interested in the figures. I'm more interested in accountability. The average businessman in Nigeria is still running his business with fuel.
Okay.
And at the end of the day, the cost implication involved running business with fuel and diesel is very, and it's telling on what goes on in the markets. Goods price, everything, in addition to transport. So it's very frustrating. The government have not really done enough around the power projects. We must be very clear and honest about that. We are there importing their transformers for. We are told in the past that in Egypt here you have better transformers. Then most times they will go beyond Egypt. They are doing business in most cases, and it doesn't really befit what we as a nation should be looking at this moment. It's not really in our best interest to spend and without getting results. I think it's time we should start seeing why we are spending money in the power sector and let the result speak for itself, not just the statements. At the end of the day, it doesn't hold any water.
Okay, sir. You spoke on other sectors that should be looked at while talking about Dangote's price reduction. Would you suggest that we also look at other sectors of power generation in the country, not just relying on the national grid?
Yes, we should look at other sectors. There's something I noticed about Nigerians. We behave like Americans, but we want results like the Chinese. We fail to realize that America as a country is capitalist. They are driven by businessmen.
Okay.
But in our case, what we want the results as if we're in China. Not understanding that the system of government there differs. So, of course, we should operate more in the business sense. More private persons should invest in power. But it's not just investing in power. Are you capable of investing in the way that we transcend to something productive? Because at the end of the day, what we have seen, I must say this, is just politicians giving out this license to operate most of the power holdings in the states. You know, and people don't have the ability, they don't have the capacity, they don't have the technical know-how.
Okay.
And this is a problem. We must look at the merits whatever we are doing, the merit that is involved, because that is what brings about productivity. Are you capable, of delivering on your goals and objectives? That is what counts. Like I would say, it's a shame that as big as we are in a nation, as with this population of people, we are for more than 30 decades now. I mean, 30 years now, 3 decades. We haven't been able to get the power sector right. It's a shame. It's a shame for us. And I think if the government is still intending to invest that huge sum of amount in that sector, we must, forfeit accountability. And people from the previous government who have spent so much on power, we have not seen the result. I want to see a panel. I want to see people being probed. I want to see questions being asked in the right direction, so that Nigerians will know exactly what has been done with their money and where we are heading to in the present times. So that is what I believe, and that is what I think the common man is also looking at, because we are collectively involved in this, and we want a better power sector for our nation that is highly competitive, so that we will attract more business, and the common indigenous business can also excel as well. These are the things that we should be looking at.
Oh, okay. One more question. Considering the epileptic state of power, would you, as a business strategist, would you buy into the opinion of individuals coming up to generate their own power and not over relying on the government?
We are saying the same thing, of course. The individual generate their own power, but the government should also create an environment for them to do so. Because I've seen in some quarters where individuals are willing to generate their own power, and for one reason or the other, the government will restrict them for doing so. And one problem we have fundamentally, one of the fundamental problems that we have, we keep playing politics with everything. And it's a very bad thing for us. It will not help us to grow. Let's put sentiments apart and political affiliation. Let's call a spade a spade.
Okay.
The sector is bad. Who's credible? Who is capable of bringing about improvements in the sector, irrespective of your party affiliation or even the region of the country that you come from? If you look at things in that light, believe me, in no time we'll start to get the needed results that we so desire in that area.
Okay, Mr. Benson, I would love to thank you for joining me today on A10 Business. It was an honor having you, sir, and I'm looking forward to having you more on the show.
Thank you, Mike. It's a pleasure. Thank you.
Thank you, sir. Have a wonderful day.
Thank you. Okay, same.
We will go on a short break. When we return, we'll look at the stock market, foreign exchange market, and what the exchange rate is today. Do not go away. Welcome back, and thank you for staying with us. And now on to the stock market, foreign exchange market, and current exchange rate. US dollar was headed for an almost 7% annual gain, while Japan's yen was set for a fourth consecutive year of losses on Friday, as traders anticipated robust US growth would make the Federal Reserve cautious on rate cutting well into 2025. The dollar index, which measures a currency against major rivals, rose 0.08% to 108.06 to approach a 2.2% monthly rise and was on course to close 2025 at 6.6% higher. The dollar was also nearing a 5.5% gain this month against the yen and an 11.8% advance for 2024 against the weakened Japanese currency, while the euro stayed close to two-year lows. Federal Chair Jerome Powell said earlier this month that U.S. central bank officials are going to be cautious about further cuts after an as-expected quarter-point rate reduction. The U.S. economy also faces the impact of President-elect Donald Trump, who has proposed deregulation, tax cuts, tariff hikes, and tighter immigration policies that economists view as both pro-growth and inflationary. Traders, meanwhile, anticipate the Bank of Japan will keep its monetary policy settings loose, and the European Central Bank will deliver further rate cuts. The yen on Friday hovered around the levels last seen in July at 157.75 per dollar, while the euro traded at $1.042, just above a low of about 1.04 struck on December 18. Traders are pricing in 37 BPS of US rate cuts in 2025, with no reduction fully priced into money markets until June, by which the ECB is expected to have lowered its deposit rate by a full percentage point to 2% as the Eurozone economy slows. And onto the stock market, U.S. equity funds attracted significant flows in the week to December 25, recovering from a prior week sell-off buoyed by a cooler inflation report, a stopgap funding bill averting a government shutdown, and a so-called Santa Claus rally. According to LSEG, LIPA data, US equity funds gained inflows for the 7 week in 8 weeks to the tune of $20.56 billion on the net basis, following a sharp $49.7 billion worth of net sales in the previous week. Last Friday's Commerce Department report revealed that PCE price index rose only 0.1% in November, below analyst expectations, reviving hope for further Federal Reserve rate cuts next year and bolstering U.S. stocks, which also typically benefits from the Santa Claus rally in the final week of the year. Investors, however, focused investments into U.S. large-cap funds as they pumped a net $31.67 billion into these funds, the highest since October 2, following $20.94 billion worth of net sales in the prior week. Small cap, mid cap, and multi cap funds, meanwhile, experienced outflows of $2.95 billion, $1.17 billion, and $853 million, respectively. Sectoral equity funds also witnessed a net $2.14 billion worth of outflows, with healthcare and consumer discretionary having $495 million and $476 million in net sales, leading the way. U.S. bond funds experienced their second consecutive week of outflows, with investors withdrawing a net $5.42 billion. Among the segments, U.S. emerging markets debt, short to immediate investment grade, and municipal debt funds recorded net sales of $924 million, $899 million, and $879 million, respectively. In contrast, short to immediate government and treasury funds bucked the trend, attracting $957 million in flows. Meanwhile, U.S. money market funds saw substantial interest, drawing a net $41.72 billion, a sharp reversal from the previous week's $27.31 billion in net sales. Russian ruble is expected to keep changing hands for around 100 per US dollar at the start of 2025 and gradually weaken to 108 towards the end of the year. Newsman poll of 10 economists showed on Friday. The ruble fell to its lowest level in about two to 1.5 years in November as the U.S. imposed new financial sanctions on Russia, but it has regained some ground since then after the central bank intervened to support it. Most analysts believe that the 100 mark against the dollar is the new equilibrium level as a situation with foreign trade transactions disrupted by sanctions stabilizes, while other factors will support the ruble. Analysts noted that the first quarter of the year is traditionally favorable to the ruble as imports, overseas travel, and external debt payments decrease. The ruble slumped to 103.7 against the US dollar on Friday after the central bank announced it would withdraw some support for the currency in the first working week of 2025 following the New Year break. Analysts predicted that the central bank would hold its benchmark interest rate at 21% throughout the first half of 2025 after it surprised markets on December 20 by keeping rates unchanged. We expect the central bank to keep the key rate at 21% at the meeting on February 14. We believe that lending will continue to slow down, aligning with the regulator's forecast for 2025, said Mikhail Vasiliev from Sovcombank. Russia's central bank has hiked its key rate to the highest level in more than 20 years as it seeks to curb inflation, which analysts expect to be at 9.8% this year, and to counter economic overheating as a consequence of excessive government spending. Global equity funds witnessed sharp inflows in the week through December 25, rebounding from significant net sales the previous week, buoyed by a benign U.S. inflation report and relief that Washington had averted a government shutdown, which restored investor confidence in risk assets. According to LSEG data, investors pumped a hefty $34.88 billion into global equity funds, the largest amount in 6 weeks, following a net $36.84 billion worth of sales in the week before. A report from the Commerce Department last Friday showed the PCE price index rose 0.1% in November, cooler than analysts expected, restoring some hope for further Federal Reserve rate cuts next year. U.S. equity funds attracted $20.56 billion, marking their 7th inflows in 8 weeks. Meanwhile, European and Asian funds also saw substantial inflows, capturing $5.11 billion and $2.84 billion respectively. Global sectoral equity funds experienced net outflows for the 3rd consecutive week, totaling $2.48 billion. Specifically, investors pulled out $810 million from healthcare funds, $639 million from consumer discretionary funds, and $480 million from metals and mining global sector funds. Global bond funds recorded net sales of $1.47 billion for a 2nd consecutive week, following a streak of 51 successive weekly inflows that ended on December 11. Global high-yield bond funds saw their largest outflow in 8 months, with net sales amounting to $2.99 billion during the week. Conversely, investors rejected $1.78 billion into short-term bond funds. In commodities, gold and precious metal funds attracted a net $1.25 billion, marking the largest weekly inflow in 9 weeks, while energy funds saw net sales of $212 million. Meanwhile, data covering 29,565 emerging market funds indicated that equity funds continued their trend with net sales of $1.75 billion for a 7th consecutive week, and bond funds also experienced net outflows totaling $957 million. This is where we wrap it up on this episode of ATN Business on Atlantic Television Network. We are open for advert placements, bookings, and commercials. You can connect with us on all our ATN socials on Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, Twitter, Atlantic TV Net. Watch us live on our website on www.atlanticnetwork.tv. At the pathways to progress. I am Faber Michael Chikwestri. Thank you for watching.